70 pages long, and there's literally a little paragraph in a 70-page lease that could be $1 million difference in value. So that's why I don't particularly like buying full triple net properties, because you have limited upside and unlimited downside. So if Starbucks were to leave when their lease is up, you now have some very, very expensive dirt. Trying to re-tenant that building with maybe a mom and pop coffee shop, you'll likely lose $1 million in value, right? On the flip side, what we do is we would prefer a strip mall that we bought had a mix of national tenants, mom and pop tenants, and vacancy.
All right. Welcome to Real Estate Hustlers podcast. I'm your host, Josh Appelman. Today we're joined with Ash Patel. Ash has got over 15 years with corporate roles, pivoting to commercial real estate, building a lean platform, acquiring and self-managing value-add assets across the Midwest and Southeast. Ash, if you could let the listeners know a little bit more about yourself.
Yeah, Josh, thank you. I've been in commercial real estate for 15 years, made every mistake you can imagine. and I was lucky that I started out with a mixed use building. So my very first property, I was able to see commercial tenants and I was able to see residential tenants, and realize that commercial tenants actually take care of your spot. They make improvements on their dime. They pay a lot of their own expenses, both inside and outside of their space. And it was a pivotal moment that changed the course of my life.
Well, let's get into talking about your first deal. Well, I guess your first deal in real estate, and then we can go to where you're at now.
Mixed use building in a college town, apartments over a convenience slash grocery store. And they mostly just sold a ton of beer to college kids because it was on campus. I had a pivotal moment again where I'm unclogging a tenant's toilet, look out the window, and I could see the rooftop of the store. There's an HVAC crew replacing all of the rooftop units. I go downstairs, ask the store owner what's going on. He says, our AC went out, so we're replacing the entire system. They put $30,000 into my building, and they only had a year left on their lease. So on my way home, I'm thinking, wait a minute, residential tenants are destroying my apartments, and commercial tenants actually improve my space. So dropped everything I was doing, became a full-time commercial real estate investor.
Dang, yeah, that's man, because that would be a lot more than $30,000 today too.
Yeah,
Replacing,
this was 15 years ago, so
yeah, I
we
can
got off
imagine.
easy.
So let's get into exactly how you pivot. How do you underwrite? How do you find the deal? I I'm oblivious to triple net leases myself. I know the leases part, but the how you find the deal and make it work.
If you want to talk specifically about triple net leases, the easiest ones and the ones that come to mind for most people are the Starbucks, Walgreens, McDonald's. And those are really true triple net. There's a huge disparity between triple nets, and we'll dive into that. So basically, a Starbucks, they're typically responsible for roof, taxes, insurance, maintenance, mechanicals, parking lot, basically the easiest landlord mailbox money ever. Now, there's all kinds of varieties of triple net, but unless you see the words absolute triple net or zero landlord responsibilities, it's probably one of those variations of a triple net. Now, what they can include or disclude is maybe the tenant pays for repair of mechanicals but not replacement. Or maybe there's a cap on the amount of money that they pay per year or per occurrence or per system. There's times where they will pay the taxes, but if they rise more than 5% year over year, that's on the landlord. So the devil's in the detail. Every triple net lease, you have to read every word of every page of the lease. And some of these leases are 60, 70 pages long. And there's literally paragraphs, a little paragraph in a 70-page lease that could be $1 million difference in value.
That's what I'm thinking in my head as you're speaking. There'd be absolutely no forgiving if you forget to read a sentence in between a sentence, meaning that's the detail. You have to know what each line it truly means. So if you buy the property at X basis, property taxes increase at the new basis, you don't underwrite for that, and your taxes go up. You could be at a negative cash flow.
So that's why I don't particularly like buying full triple net properties because you have limited upside and unlimited downside. So if Starbucks were to leave when their lease is up, you now have some very, very expensive dirt. Trying to re-tenant that building with maybe a mom and pop coffee shop, you'll likely lose $1 million in value, right? On the flip side, what we do is we would prefer a strip mall that we bought had a mix of national tenants, mom and pop tenants, and vacancy. So the downside was limited because Dollar Tree, who was our anchor, had 6 years left on their lease. They're not going anywhere. But the upside is filling the vacancies, converting some of those gross leases to triple net. And now, when we're done, we can sell the property at a full triple net asset. And because of that, the cap rate is 1 or 200 points lower.
So you would be, are you in the fives cap rate wise?
No, we bought it at a 10, ended up selling at an 8.
Okay. All right. That's a lot higher than I thought. So it's beyond just coupon clipping returns. There's still plenty of meat on the bone to make a sizable return every month and year over year.
Yeah, so when we purchased the building, it was an 18% cash on cash.
Okay. Okay. And what all did you do to the building to create the value?
There was a few roofs that we replaced, a handful of HVAC units, but really it was just getting better tenants in there.
Got
We
it.
had, probably one of the biggest things that added about $2 million in value was we signed O'Reilly's Auto to 37,000 square feet on a 15-year lease, and no TI or tenant improvement money was given to them. So when a buyer is looking at this property now, they're like, okay, wait a minute. Dollar Tree's been there for 20 years. They're not going anywhere. We also have software that will tell us that that particular Dollar Tree is in the top 85 percentile of all Dollar Trees nationwide in terms of visits. So you have one of the strongest Dollar Trees in the country. You have O'Reilly's committing to 15 years, a couple other national tenants. Like, this is an incredible strip mall that's had great trajectory of growth.
Is that software Placer AI?
It is.
Nice. I was just looking at some different AI software the other night, and that came up, and it's incredible the way that it can measure even what tenants you're missing from your strip center.
Yeah, there's a lot of cool tools, but it's also $10,000 a year.
You pay the price, to sit at the table. That's for sure. But if you that $10,000 becomes cheap when you're creating $2 million of value with it potentially,
Correct.
you still have to execute. You still have to do what you say you can do, and that whole thing. And you all are operators as well. Is that correct?
Yes, we self-manage. Probably 70% of our properties we self-manage.
Tell us a little bit about that. How did you get into self? You didn't start out self-managing. I don't think anybody truly, unless you just come from a property management company and then you convert over to ownership. But tell us how that came about.
I started out that way. Listen, my
Okay.
first property was a $230,000 building 15 years ago. The next couple properties were half a million or less, and then maybe a little bit more expensive. So I scaled slowly. I did it for 10 years without raising capital. So I never had property managers. We did everything in house. And I'm not saying this is the path to go down, but for 10 years, I was a one man shop, right? I didn't have my first hire until year 9 or 10. So we just scaled steadily. Never lost investor capital on any deal. Have always delivered what we promised. So managing properties in house was just how we've always done it. I tried the property manager route, thinking, I achieved some level of success, and now I could farm this stuff out. No one's going to manage it as good as you. So even if we have property managers on properties, every tenant still gets my cell phone number and the cell phone numbers of everyone on our team. We want those calls when things are not going right.
Yeah, having your finger on the pulse. That's truly what helps just keep properties where they need to be and keep your tenants right there in place. also keeps you aligned with the business goals. That's it's helped us out a ton. We use Slack just for internal communications and staying really within sync of everyone that's operating both in the field and in the offices. So, but it's important to be there in the thick of it.
Yeah, Josh, do you edit these podcasts?
They usually go out just raw.
Okay. Are you tapping on your desk?
Uh, I don't maybe.
Okay, it's really resonating through the mic.
It's just the phone. The phone has a kickstand on it, so I was
Oh, okay.
flipping that back and forth. But it
That's
must be a
what's doing it.
microphone picking it up. But no, they usually go out raw, and then we'll cut it up and things. Um, but property management, being the operator and execute on the business plan, I feel like it's extremely important to be vertically integrated, especially with today where you have syndicators out there raising capital, but they're 3 steps back from the actual operations of the deal. And really, and then that can go even in the GP where nobody knows what's going on in the field, besides the group that they hired to run it, which might not be running it very well. What has been your kind of experience on that notion?
That's a good question. So we still have property managers from properties that we've acquired, or one particular property when we bought it. It was an office building, had 57 tenants. So onboarding 57 tenants for our team of three would have taken an inordinate amount of effort. So for that reason, we found a phenomenal property manager. I think if they're really good, and they're few and far between, I hate to say, good property managers,
Yeah.
keep them, right? So this one in particular, they only operate in Louisville, and they only do commercial. They don't touch apartments. So they're hyper focused on what they do, and they're also developers. So they manage a lot of their own properties along with customers' properties. But back to being vertically integrated, um, even if you are not, you have to have your hand on the pulse. Like, yeah, that's a tough one because there are a few really good property managers. There are also investors or syndicators that only do fully leased triple net national tenants. And for that, they can certainly hire a property manager because there's very little for the landlords to do, very little communication. And in that case, it'll work. But for anybody that's doing value add, you've got to be involved with every aspect of your asset.
Yeah, well, and that's what we're buying is value add. We can't. It's not really just taking cash and putting it in bricks and wait for 20 years. We constantly are recycling cash that we've created into new deals. So, and for
Here's a
that,
question for you.
uh,
What do you think of all these new syndicators that are doing these generational holds or 10-year holds?
I mean, I guess time will tell. I don't know. You don't know what you don't know, and that's what I feel like the syndicators have been washed out for the most part because there was such a fad to go out there and raise capital and deploy it in deals, and the operators were new or didn't have any prior experience of even owning a business, and now they're getting into real estate, which they were told that it's passive when it's not if they're the operator. Far from it, and I think there's just things are washing out now. And
Yeah, but it goes back to what you just said. You like to recycle cash. Well, pre interest rates going up, every syndicator was doing 3 to 5 year holds. And now that deals have gotten tougher and thinner, people are going to these generational holds or 10+ year holds. And I really don't like those because you're telling me the deal doesn't make sense in 3 to 5 years. You need time on your side to make this deal work. So I would caution your listeners to avoid those. Who wants to give somebody their money for 10 years hoping for the best? Would you ever give your money to a stockbroker and say, "Hey, see you in 10 years"?
it just takes a different, me personally, no, but it takes a different person that might be looking for just a depreciation play, possibly, or they just want real estate in their portfolio. But yeah, if they need time on their side to make the deal pencil to start generating meaningful returns, then that's as long as they're not holding their breath. I
Yeah.
I mean, if they're being sold that by somebody out there, I mean, it's that goes back to the operator and the sponsor. What other deals have they done? What does the end look like, and have they made it to the end yet on any other deals too? Have they gone full cycle? Have they done something 10 years ago and now 10 years, we're here at the 10-year mark and this is what happened, versus forecasting?
Yeah, another really good question for your listeners to ask if they're going to put money in someone else's deal is ask them, how many deals have you done on your own before you started raising capital?
Yeah.
Because I don't think you should be allowed to come out of the gate swinging with other people's money, right?
Oh, for sure. 100%. If you're not willing to put your own out there on the line first, solo, beyond before you raise capital, you shouldn't be asking capital from anyone else. I mean, if you want to pay, if you're willing to pay ignorance tax by learning it on your own dime, then you should. You've got to earn that right to go ask someone else for their cash, because now you know what not to do. And I'm still paying ignorance tax on new things that I'm the sole investor operator on, and it's not going to be the last time. I mean, but that's part of trailblazing too. My kids won't pay the same ignorance tax that I've paid. I hope not.
Yeah. Another good question to ask is how much money are you putting into the deal? Because a lot of syndicators will say, yeah, we're investing alongside of you. But in reality, they're just taking their fees and rolling it into the deal. Right. So we typically put half the money up ourselves and the other half comes from investors.
Yeah, and that's alignment. That's being aligned, because if you're going to keep your foot on the pedal to get your cash back, you're going to be in true alignment with that, and as well as your investors who have the cash in the deal too. Um, that just totally makes sense, and that goes back to, you come from the operator, the operations on the ground, and you didn't start out by raising capital and hoping that it worked out. You used your own capital, made sure it worked out, and then you went out and brought some other people on your journey with you.
Right.
So tell us about some learning lessons that you've had along the way.
There was a time where people used to say, everything I touch turns to gold. And I think I started believing that because I ended up buying like half a dozen properties at this estate auction. Not even, I wasn't even at the auction. I was at a state at the time of the auction. I sent someone else in my place to bid. They were on the phone with me. I couldn't hear over the auctioneer in the crowd. And all I kept hearing is, you want to keep bidding? I'm like, yes, let's go bid higher. And ended up buying 6 properties at that auction. Came back to town, and I kid you not, one of the buildings was half torn down. It
Mm.
looked like a bomb hit it, and my heart sank, and I'm thinking, what have I done? Those properties, it took me 6 years to offload, tons of headspace. And it was just in a town that been ravaged by drugs and job losses, but it was right on the river. It was once an incredible destination place. And me and a couple of the guys had the vision of trying to rehab the town. We were just fighting too many forces. But at the end of the day, great lesson to learn. It was just my own money, no investors, but 6 years, I had a constant reminder of what a bad decision I made and what happens when ego gets the best of you.
What happened on the sixth year?
It was a 6 year where I finally was able to sell the very last property.
And what was the outcome? Make money? Did a lot of
Um,
time, but you got your money back, or?
Honestly, the money, I don't know. I would assume with the time value of money, I'm sure I lost. Let's just assume I lost some money. It wasn't significant, but it was just the headspace that it took up, kept me from doing other things, and just really took a lot of our time.
Yeah, that's the brain damage, and
Yeah,
that those deals are just energy suckers. And I've had a few of those, but you get through them, and you know what not to do, and move on to what you know you do best.
absolutely.
That's so. Have you done invest beyond multifamily? Have you done multifamily deals?
I have. I've also participated as an LP in a lot of multifamily deals, but that was between 2015 and 2019. And it was around that time that their returns started falling off, right? I mean, 2015, I was getting 26% annualized returns on
Wow.
multifamily syndications. That was the peak probably of multifamily. And by 2019, it was probably 16% annualized returns. And that was when I stopped. I've had my own apartments, single family homes, duplexes, uh, those were just headaches. I absolutely despise doing residential. And I'm also not good at it, right? So when a tenant tells me they promise they'll pay me next month, I believe it. And in fact, like I try to give them life advice and help them, and it's just I'm not cut out for it.
I think when you buy bigger deals and we're all constantly looking for the next deal, and there's no big deals out there, and then you start looking into the Zillow, the Redfin, you're like, what else is out there? And it's just not appetizing at all because now you're just because the big deals is where the fun is. They're fun to take down. They're fun to on the takeover, the business plan, the execution, and
Yeah, but I've spoken to a lot of people where it's been years since they found a good
yeah,
large deal because there's still people out there willing to overpay
mm,
for
yeah,
large
yeah.
multifamily deals. And I mean, I really encourage people to pivot, get out of multifamily, get out of residential altogether.
And just get the there's still base hits out there for sure. You got a much smaller, but they're base hits. But what as far as strip centers or triple net leases, what should they be looking for that are tangible?
Yeah. So if you have a newer investor, you're not going to buy a $10 million strip mall. Look at where you shop. Those neighborhood strip centers, right? Even if it's a little mom and pop, two tenant strip that's in a suburban neighborhood, those cash flow incredibly well. The pizza place, the deli, the dog groomer, those are internet resistant, recession resistant businesses. And if there's no land to build new competition, it's an incredible opportunity. So you can start out small with suburban retail, suburban office, um, but just start underwriting things close to where you live, right? And then office again, we have a once in a lifetime opportunity to buy office for pennies on the dollar.
What are so you're bullish on office? What's the play there?
Well, if you look at COVID, when the work from home started, everybody was forced to work from home. Companies were forced to adapt. And initially, CEOs were very skeptical, but then the productivity metrics came out and they realized okay, wait a minute. These guys and girls working from home are on average 3 hours more productive. Well, here we are 5 years after the lockdown. Now the metrics are okay, if you're working from home, you're 4 hours less productive working from home because we all learn how to game the system, right? Taking 2 hour lunches, hanging out with the kids, the spouse, taking the dog for longer walks, not really starting on time, having these little mouse movers that make your employer think you're working. So productivity's gone down, not to mention these mental health issues that kids are complaining about because they don't have any people interaction. They're losing people skills. So most major companies have called people back to the office, even the conservative ones, Google, Facebook, Disney, big banks, JP Morgan, everybody's coming back to the office. So they started out, okay, let's try 2 days a week, 3 days a week. They're done. It's 5 days a week back in the office. The difference is they're not going back to the downtown offices where you got to pay to park, walk a couple blocks to your building. They're now seeking suburban offices. Let's build where people are closer, where their commute is shorter, right?
I can
The
see that.
employers want to be where people are.
Yeah, I'm downtown Cincinnati, and I totally get with agree with the parking and and really the nonsense that you see and hear. It's the nonsense.
Yeah, so look, I'm in Cincinnati as well, and a lot of those restaurants and bars, because people were moving out of downtowns, companies were no longer bringing their workers downtown. They started opening in the suburbs of Milford and Loveland and Mason. So that's where all the action is. You want to be in the suburban downtowns.
Yeah, yeah, I agree. I totally agree with that. It's so. What is your take on AI? What does your horizon look like on AI and the different things coming out?
In terms of jobs or finding deals or what?
Yeah,
Which way do you want to go?
that's a broad question. I
Okay,
think that it's all encompassing though, because it's
okay.
all hitting at once at the same time.
Yeah, so jobs, there certainly will be attrition, right? Already, I mean, how many people use AI for legal work versus lawyers? I
Mhm.
mean, I think that's going to be one of the first professions to go. Coders have already fallen off, and all the tech company CEOs will tell you, we don't need coders really. So what used to be one of the hottest fields has now it's not just not sought after anymore. So I
Vanished.
think there'll be a shift in jobs, right? But people thought that during the Industrial Revolution, uh, many times in the past, the dot com bubble. Um, I think there will be a need for jobs. It'll just shift. But in terms of looking for deals, this is another reason I love our space office, retail, medical. It's an inefficient market. I've had so many Stanford, MIT, AI people say, "Hey, I can help you find deals." And I said, "No, you can't." Well, give us a shot. So I'll lend somebody from our team to them for a month or two, and they'll spin their wheels and finally they'll just hang up. I mean, it can't be done because there's no way to effectively find and or underwrite deals with all the detail in these 70-page leases, right? You need a human for that. So for what we do in terms of finding and underwriting commercial deals, sure, AI can help weed certain properties out or give us an initial look, but the devil's in the details.
Have you heard of Notebook LM?
I have.
Man, you can drop every document in there. It's got one source of truth, and truly reads in between the lines. Points. I was reading, going through a Lura contract, and I mean, it just picked up things that were like, "Wow, good, okay, you can go with that."
Yeah, it is great.
It's but those are the tools that help firms advance too, and then give you the insights that you might not have had otherwise, unless you hired a high paid consultant or and work different groups. But I think AI is definitely going to enable operators and people get ahead in certain aspects. Uh,
So,
Leverage.
Josh, if you look at those long leases, right, that takes up a lot of our time. So we actually hired that out to attorneys. Even they skip things that were very important. There's really, and we certainly use AI plenty to read through leases and whatnot. But at the end of the day, it has to be one of us that goes through every word of that lease.
Mhm. Right, for sure. Especially if you're getting ready to sign on $10 million worth of debt, say, and yeah, you definitely want to not only read it but understand it and know exactly what each word is. You're obligating yourself to what could be a 20-year lease in some cases. So it's got to be, yeah, it's got to be word for word. I totally get that. Um, Very cool. There's another piece of technology that came out. It came out maybe a couple weeks ago, but it started going really mainstream this weekend. It's called OpenClaw. Have you heard anything about that?
No, is that the agent AI?
Oh man, it is. It's wild. It is totally wild. It is. It's something that I would tell you to look into, but it is. It's a doer instead of just a chatbot assistant. Um, But those are the things that I'm looking like 5 years down the road on the horizon. What is this? What does the new economy look like? What is the end consumer doing in order to trade in this marketplace to create value for everyone else? That's
Have you heard Elon's take on this?
He says there's going to be infinite money for everybody.
Right.
He's selling the unicorn, but I think that is he either had to put his foot on the pedal or get passed up. I mean, he just shut down two of his models on Tesla to create his for his robot manufacturing. So they're full steam ahead.
He also said the Roadster would be coming out in 2020.
Yeah, yeah, that is true too. That is true. There's been a lot of things. I mean, sooner or later they come to fruition. Uh, just what is it? I don't know. They're all. It's all here. It's all happening. It's all we see it.
Yeah.
But when these things come online, what is it going to do to what we've got going on? We will find out. I'm sure. But Ash, if a listener wants to get a hold of you, talk to you, collaborate with you, possibly invest alongside of you, how can they reach out?
Easiest is probably just go to investbeyondmultifamily .com. I'm accessible on LinkedIn, Facebook, email. I'm very easy to reach and I answer all of my inquiries myself.
Awesome. Very cool. Ash, definitely appreciate your insights and look forward to continue following you. Appreciate it. Thank you.
All right, man. Thank you.
All right. Bye.